The S&P 500, the NASDAQ 100, the IWM, the dollar, the VIX, the bonds. I go into detail about every single thing every day. And in today's video, we're going to talk about what the next steps are for the market, why I was not bullish as we were breaking up here, why I was instead very, very bearish. So in today's video, I'm going to continue giving my thought process on what the next steps are for the market, in my opinion. All right, so without further ado, let's get started with the video. All right, so number one, let's just first talk about the dollar. All right, so the dollar we know has an inverse relationship to the market. If the dollar is doing well, that means that the stock market should be falling. Currently, I was showing how the dollar looked very, very bullish, and we can clearly see that the dollar is continuing to skyrocket up. Okay, similar to the dollar in its correlation is the VIX. So we know that the VIX has an inverse relationship to the market as well. If the VIX is doing well, that means that the stock market is falling. All right. So basically, we can see that there's clear cut strength in the VIX. A few days ago, we held this 1550 level perfectly on the VIX. We continued breaking above 17. And then today was a big move upwards, obviously, as the stock market fell. All right. So we saw this strength in the VIX a few days ago. Even though the SPY was breaking into 420 and breaking above resistance levels, the VIX held support here. So clearly, the VIX helped us get a better understanding of which direction the market was going to go. So next, I want to take a look at the TIP and the 30-year bonds. So we know that the bonds have a correlated relationship to the market a bit. All right. So if the bonds are doing badly and poorly, that means that the stock market should also be doing poorly. So clearly, it's not as clean of a relationship as the dollar or the VIX, but we can use this as a bit of a forward-looking indicator. If the bonds are breaking below major levels of support, then that means eventually the stock market should really, really start to show weakness, because we clearly see over the past few weeks, the bonds were showing huge weakness. We also showed in yesterday's video and the day before's video that we are at a record high short interest in the bonds. So there are more people short the bonds than ever in history. So if people are short bonds, that means that it's not good for the equities market or the stock market. So the equities in the stock market should also be falling. So we look at the correlation there. All right. And that's the TIP ETF. We could also take a look at the 30-year bond. So for the 30-year bonds, we can clearly see like a similar correlation. Obviously, if the 30-year bonds are doing poorly, that means that the market overall should be doing poorly as well. And once again, you can clearly see how weak the bonds look. It is just a clear-cut breakdown below major support levels. This is as bearish as it can really get. And this is another reason why people were very, very short, because this is another reason why the market failed at 420, in my opinion, because the bonds were showing this much weakness. Had the bonds been showing a lot of strength, the stock market would have had more strength and more power alongside its equity buying if the bonds were doing well. But because the bonds were not doing well, it's fearful for investors in the stock market. So people look at the bonds as a very, very important gauge of the strength in the stock market. So very, very clearly, we can see that the bonds are not doing well. So before I continue, if you guys are enjoying the content, please make sure to subscribe to the channel. It really, really helps, and I would really, really appreciate it if you guys subscribe to the channel. There's so many people watching the videos that are not subscribed. So if you guys can subscribe and put on the post notifications, that would really help, and the support goes a very, very long way. I really, really appreciate it, and I hope I am continuing to give you guys value that you can bring on in the future of your trading careers. All right, so yeah, I just wanted to throw a little ad in there. All right, so back to the video. This is a chart of the NASDAQ, and I was showing how 335 or 334, that area was going to be a very major support level for the NASDAQ. If we continued to hold at this level, then yes, we would be able to continue upwards. But today we gapped down intraday, we gapped down overnight, and then we broke down. And this was a very devastating loss for the NASDAQ. We broke below a very major level of support. And a lot of this was hinted at by the weakness that we saw in other large tech stocks. So what I want to look at are the other large tech stocks that hinted this weakness. So Apple, for example, was one of the biggest losers that we saw. So this setup that we saw on Apple, absolutely devastating. We had a gap up and then we broke right down lower. This was not bullish at all, this move that we see on Apple. And then the next few days afterward, obviously we are clearly showing weakness now. And then we finally just got to close below a very major uptrend level here on Apple. And this is not good at all. We can see that this uptrend was held from all the way back in January. And we can see that it has multiple touches here. So back in January, then again in March, then again here, and here, and here, and now again. So this is 1, 2, 3, 4, 5, 6 different touches on this trend line, and we got a close below. So now we have to see, is this going to finally just like continue to fall lower, or are we going to hold support at around 170 and then bounce up? But for now, this is clear-cut, definitive bearish momentum on Apple. What we need to see is so for bulls, for this move to continue upwards, is we need to see either 170 hold or basically this 167 area hold. And we need to see some sort of support level being made and a retest of levels of resistance. At that point, that is when I think we could see another leg down. I would be so currently, right, on Apple, I would be very surprised if we just continue falling lower without retesting any levels of resistance. But that could also happen. But generally, I don't think that's not usually how things play out when Apple is the leader of weakness. But we're going to have to take a look at that. But clearly, Apple's weakness really hinted at weakness in the NASDAQ and the overall market. So we saw weakness out of Apple today. Microsoft also didn't do well at all. Microsoft was one of the biggest winners over the past few weeks. And it was basically these stock, Microsoft, Google, and the chips are holding the market up, the NASDAQ up essentially. And Microsoft, you could see, clearly failed here and had a big move down. Not a great sign for Microsoft. It looks like it's breaking its uptrend. But usually on a setup like this, the next day is also bearish. Google also does not look great. It's continuing to fall lower. And, this is not really a very bullish setup on Google either. Let's take a look at Nvidia. Nvidia, we have earnings tomorrow after hours. We're still technically holding above support, but it's not showing that much strength, right? And then AMD looked very disgusting. We had a very big move upwards here. But then we fell intraday. We didn't get a close above any major level of resistance. And you can see here, at 108.70, that was the prior high. We broke clearly above, all the way up to 111 today. But we fell back below it and we never got a close above the prior level of resistance. So this is not bullish on AMD either. What could end up happening now is we just need to see if we can get a retest within this wick for a continued move to the downside. But AMD and Nvidia don't really look that well. And all eyes are going to be on earnings for tomorrow, right? But the most important news that are going to end up happening tomorrow that I should have showed earlier is Yellen is going to speak. Treasury Secretary Yellen is going to speak at 10 a.m. And then FOMC meeting minutes are going to happen at 2 p.m. So they're going to be released. So tomorrow can be very stagnant in terms of its price action because people are going to be anticipating and waiting for FOMC minutes. So just understand that implied volatility might be high. And if it isn't high, regardless, it might not be a very trendy day. Just keep it very simple. Go short at levels of resistance, go long at levels of support. Don't expect momentum to continue. Just wait. Just buy longs on dips and buy shorts on pops and just keep it very simple. All right. Tomorrow is going to be pretty turbulent, and then the day afterward just tomorrow is going to be very turbulent. Then we have Nvidia earnings tomorrow after hours, and then Thursday morning we have preliminary GDP numbers. So the next 2 days into tomorrow morning, into Thursday morning, are going to be very, very turbulent. So just take it easy, all right? Don't overtrade. All right, and now we see Tesla, very, very similar to what AMD and Google were doing. Disgusting, huge wick to the upside, and it doesn't really look good at all. I know that Joey got a really, really good short on Tesla. He was telling us about that during the live stream, and it just completely just fell dramatically. Overall, you have to look at everything as a whole. We were very, very overextended to the upside. These tech stocks were at levels of resistance, super overextended. The NASDAQ wasn't holding. It didn't look that strong. It started to stagnate at levels of resistance as well. The VIX was showing strength. The bonds were showing extreme weakness. The dollar was showing strength. So many different variables were shown that we were going to end up getting a move to the downside. So I hope, not even to mention what ended up happening with the IWM. So the IWM a few days ago painted a very, very bearish picture, right? Right here on this candle on May 19th, very, very bearish picture. This did not look good at all. And then today we had a huge move to the upside, and then similar to AMD, fell below any major level of resistance and didn't get closed. So just very, very devastating, disgusting range bound day that didn't break above and close above any levels of resistance. So it was just not a good bullish day. But now what I want to do is I want to look at the SPY, S&P 500, and we could do some technical analysis on that, and I'll give you guys my thought process. So the SPY now, very, very simply, we were at levels of resistance here at 420. Everything else looked very, very bearish and overextended to the upside. It didn't look like the move to the upside could sustain itself. So having this pullback was needed. Okay, this is a very, very normal thing for the stock market. The other thing that I want you guys to take into consideration here is that the MACD is sharply starting to fall lower, and the price is also starting to fall lower. So if this gets a cross down below, once we get a cross on the MACD where the blue line crosses below the yellow line, that is considered a bearish crossover of momentum. And generally for the next 1 to 2 days, we are either neutral in price or we're bearish. So keep that in mind as well. Things are looking good for bears here. The next thing is, next major levels of support that we need to hold are 410 and 412. If we can hold 410 and 412, then very similar essentially to what's going on with Apple, right? Apple needs to hold levels of support, and at this point I would be very, very surprised if we just continue to fall lower, just free fall. I would be very, very surprised. But of course, you know, anything can happen. But in general, you know, I'm expecting us to get a bit of a retest maybe to levels of resistance for another move to the downside. But in general, you know, basically bounce to like 416, 417, and then another move to the downside. I would be surprised if we just break below 410 or 412 just straight away. But in general, overall intraday, I was only leaning short. And it's so easy to just trade alongside the larger time frame momentum. The larger time frame momentum has clearly been bearish over the past 2 days. And clearly today, as we got a gap down as well, you just had to look for good shorting opportunities. You didn't need to force yourself to go long. You didn't need to, like, there in days where the market is moving up, right? Certain setups would work if you bought at support. But on days when the larger time frames are bearish, it doesn't make as much sense to try to play against the momentum. So let me just go ahead and just explain that a bit real quick. So basically, all right, so let's look at 12 to 1 p.m. This is the 1 minute chart on the SPY. All right, so generally, right, if we're breaking below, if we're showing a lot of weakness and we're coming to a level of support, generally on bullish days, it makes sense to buy calls or to go long at levels of support. All right. So for example, how many times? So as we were falling at 12 o'clock, we ended up having a big move to the downside. Wow, look, we're holding support. And then we had a bit of a move to the upside. And then what ended up happening, we made another leg down. So something like this only happens when the overall momentum of the larger time frames are bearish. So again, wow, we just had a very big move to the downside, another leg down. Cool, we're going to go long. What ends up happening? Another leg down. Oh my God, wow, we made multiple legs down. We have to bounce now. This has to work to the upside. Okay, I'm going to go long again. Then what ends up happening? We get a little bit of a bounce. We never, on all of these bounces, we never broke above any major level of resistance. And then what ends up happening the third time you try to go long? Another leg down. And then you're like, all right, you know what? Fourth time's a charm. We have to go up now. And I'm going to go long with a stop loss at, 417. And it's just going to work out. It has to work out. Cool. This one was the smallest little baby bounce. And again, once again, we never broke above any major level of resistance. And then this vomited. And then you're like, okay, whoa, we're vomiting. All right, let me try to go long again. And then basically every single time you would have went long, trying to fight the momentum, you made another leg down. So if you had looked at the larger time frame, you would have been on the right side of the market. And it would have been much, much easier to trade alongside that momentum. You wouldn't keep trying to catch every single bottom. You wouldn't keep losing 10, 15% on each trade here. Even if you had a stop loss, congratulations, right? But you're taking needless trades that aren't necessary. You could just take less trades and take higher quality trades. The highest quality trades, since we already knew that we gapped down, the daily time frame was bearish, all you needed to do was, instead of trying to catch the bottoms, you could have just went short on levels of resistance. Could have just continued to go short. Obviously, you might not have caught this short over here because you would have thought it could still go up a bit, but you would have easily caught these shorts here on these pops up, and then you would have been able to capture a lot of the downside. So it's very, very important to look at the larger time frames when you're intraday trading. And I hope that made sense for you guys to see. So overall, right now, the momentum is still clearly going to be bearish, but now it depends on what ends up happening overnight. We need to see if we can finally get, if we can hold support. But regardless, it depends on if we gap down. We're going to have Secretary Yellen speaking tomorrow morning at 10 a.m. But if we gap down, regardless, this is a bearish setup. The only thing that could help is if we hold 410 to 412, and then we can end up going long there or bouncing. But any sort of bounce that we get to 416, 417 is still going to be bearish in my opinion. This is still bearish. There's still clear bearish momentum on larger tech stocks and everything as well. So yeah, it was very, very easy to just stick to that, right? But heading into tomorrow and then Thursday, Friday, if we start showing some strength, so if we start bouncing and start showing strength, right, on the SPY, then we can lean long more. But currently, right, today was pretty easy. We just leaned short. So I hope all of this stuff made a lot of sense. Hope you guys enjoyed today's content. Again, if you're still watching towards the very end, thank you guys. I really, really love you guys. Please make sure to comment, like, subscribe, do all that good stuff. I really, really appreciate all of your support. It really means a lot to me. And thank you guys once again for everything. And I'm really glad that I can help and help in whatever way that I can. All right. So yeah, I'll be here bright and early tomorrow morning, live streaming again. So with that being said, I hope you guys have a great day. Thank you guys. Take care and have a good one. Thank you.